Last week, I predicted this breakdown that we recently witnessed in the crypto markets to a T, and I'll prove it to you in this video, which is an extremely valuable private call that I hosted for our members at Altcoin Pro University. And in this replay, I predicted that XRP would break down to at least $1.60 and Bitcoin down to at least $77,000. These signals provided many of our members with some of their greatest gains by shorting the crypto market. Now, I get anyone can get lucky, and even a broken clock is right twice a day, but this call was far from luck. I applied some skills that I've learned over the years that have led me to these conclusions, and in this video I'll show you exactly how you can too. So what comes next? Well, it feels like the entire market is holding its breath right now, and while stocks continue to defy gravity and rally towards new all-time highs, crypto is telling a completely different story. This is what I like to call a leading indicator, and we are seeing a massive divergence where the major indexes like the S&P 500 are up, but crypto, considerably the ultimate risk on asset class, is breaking down. In other words, this is more than just a dip. It's likely a warning sign that crypto is essentially telling us what's coming next for every other market. Now, let's be honest. The current macro environment has made for an extremely difficult year in crypto, and the pressure is mounting. With interest rates remaining flat and retail investors struggling with affordability, we're looking at a situation where the Fed is going to likely do too little too late, which is likely going to send shockwaves through your portfolio if you aren't prepared for this next shift. So stick around until the end of the video, because I'm going to show you exactly how to read these intermediate term trends so you don't get caught on the wrong side of the trade and likely would have profited from a short position. I'll be breaking down the specific price levels and candle structures you need to watch to protect your capital before the next major breakdown. And by the end of this video, you'll walk away with a clear roadmap of some of these key supports and what actually matters versus the ones that are simply traps for retail investors, which most people are going to miss. And before we dive into those charts, I just want to take a quick second to share I Trust Capital with you, one of our sponsors on the Bull Runners channel, where you can essentially roll over any one of your retirement accounts into a Roth IRA or a crypto-centric IRA account. And when you do, you'll get access to this $100 funding bonus. Now, what makes this so cool is that not only can you buy gold and silver, but you can also buy all of the major market cap cryptos alongside all sorts of AI tokens, infrastructure tokens, DeFi tokens, real world asset tokens, and the list goes on. They're always adding to their lineup. So be sure to check out I Trust Capital with the link in the description below to claim that $100 funding bonus. And as always, my friend, if you're feeling blessed and bullish, comment 777. And if you're going to be the wealthiest person in your family tree, smash the subscribe button. Follow the trend. Okay, the trend is your friend until the bend at the end. So if you're a crypto investor, right, where does it look like this trend is? Let me go ahead and actually just hop off the auto and look at this. It's pretty straightforward, ladies and gentlemen. This is stuff that I've covered over and over and over again. Technical analysis essentials. We have an all-time high right here. Have we had any other highs? No. So then I could go between all of the ranges, right? I could do like, sometimes it's actually easier to just toss a line chart on there so you can see it. So the way that you would do that is click right here, go to line, and notice that I circled the high up here, right? Look at where my high is circled. But when I toss the candlestick on, well, let me do it a little bit cleaner. Let me put a line there. How about that? We'll toss a line right here. We'll toss a line right here. And then I'll toss another line like right here. And the reason I'm doing this is just so you can see, right, where I have my lines. Because maybe many of you don't know, or maybe many of you, when you're looking at a chart, you're looking on your Coinbase app on your phone, and it kind of shows you a 7-day period, which is not, yeah, it's showing you the last like 7 days of time, but it's a line chart and then it has an area. So a lot of the times it'll look like this. And I don't think you're ever really going to understand markets well using an area chart. solely. It doesn't mean that you can't succeed. It simply means that you have more data and a better picture into the market with candlesticks. Okay, so up here you can see that we're at 126 and I have a line at the high. I have a line at the low from October 10th, right on that flash crash, 99,000. I have another line at the low as the trend continued to dump through November 21st of 2025 down to 80. So I have about four lines placed, okay? When I toss it on this line chart, you can see that none of those ranges are actually touching because all this is doing is basically placing a line at the close of every single day. So on October 8th, we closed up to 123. The next day we closed down to 121. The day after that, we closed, October 10th down to, I'm doing the math here, 112, so on and so forth. So it's only marking the closes, which means I don't get a full picture into, what happened in the market. Sometimes line charts can be helpful though, just as a heads up, to see where a major resistance or a support would be, right? I personally don't like them as much because you'll notice, right, we bounce around a lot. It's a little bit harder to get a view into the market. But sometimes it's helpful to know, okay, just for the trend's sake, I should say, less so for actually looking at horizontal supports and resistances. So if you're ever struggling to track a trend, where are we headed? Okay, just go to the last all-time high of the, for a period of time. Like looking at the chart, right? This is quite a period of time going to October, which means where's the high? Here. Okay, where's the low but after this high? Here. Now, sometimes if you're already struggling with that, here's what you do. You just go find the next major high after that range and just circle that. Next high after that range, circle that. And you could do these minuscule, but this isn't helpful because look, right? Breakdown. So sometimes it's like you don't need to do all the mini highs. You could just do major highs, okay? Here, right? Here, cool. Here, and then just circle the lows between those highs. This is the lowest low between these two highs. Between these two highs, right? This is the lowest low. Are these lows lower than this low? Lower than this low? Yes. Is this high lower than this high than this high? Yes. At one point in time, what did we have? Right? A breakout for a new local high, a new higher low, right? Another higher low until we broke down. So helpful for trend, okay? Just as a heads up. Now, looking at the general trend, let's zoom out a little further. Okay, so this is a better view. I'm going now to the 3-day time frame. If I'm just looking at this thing and you ask me, where's the high and the low of the range? Okay, pretty straightforward. Here and here. Okay. Now, this low is far lower than any of the lows that happened into these highs, which means, you know what? That is a new intermediate term downtrend, straight up, like not debatable, right? You could ask someone from that has an outlook of 5 years into the markets. Like I don't want to wait 5 years to know whether we're in an uptrend or a downtrend. So me personally, I do more intermediate time stuff excuse me, time frames when I'm looking at charts. Okay, it's like now I can actually make decisions versus just waiting for something to happen. So now the next major high of the range is here. Okay, if we get a new breakdown below which lows, I would argue the lowest lows of the range, this one and this one, guess what? The trend is likely going to continue down. Okay, where's our next major support? If you're just looking at this is where I don't love using again, right? Line charts versus candlesticks, because candlesticks might give me a better picture. So let's go ahead and toss those candles on now. You can see that there's actually quite a bit of support here, and this isn't a bad support. But sometimes, right, the market will break way below there. And so let's say you were setting a stop loss because you're using a line chart. You're like, oh, look, 78,000. I'll set my stop loss at 77 or 76. You don't have a full picture. If you set a stop loss there, it's likely it's going to get filled at some point in time here. And then guess what? You're out. And then the market rallies back in your direction because you didn't have a full picture. So just as a heads up, like for those of you guys who really want to be good at this stuff, I know that a lot of your phones and brokers make it simple by having 1 day, 7 day, 30-day outlook, right? Area, line chart. Stay away from those. This would lead me to believe, you know what, realistically, I should start buying, if you're buying a dip or whatever. I'm just making an example. in this range, and I would not have a stop loss up until at least 73 to 72. And by the way, I'd place a line there and then look back. Do we have a lot of resistance or support there? Answer, yes. So matter of fact, it's possible on a breakdown. Look at, you wouldn't have known that looking at this. Do you see that? On a breakdown below 86, that we break all the way down to 72. And guess what? I would have been stopped out. So just drawing lines, I kid you not, can really help you to become a better analyst. Okay. Where do we have a lot of resistance before we broke out? Here. Where do we have a decent amount of support? Here. Okay. Where do we have a lot of resistance? Here. Okay. Why? Look, once, twice, three times, breakdown, resistance. Guys, like this isn't, again, like rocket science. We're literally just drawing lines on a chart that I can drag and drop anywhere. Okay. The hard part is eventually having the courage to make good decisions and the discipline to have good risk management rules in place when it comes to your stop loss and allowing your stop loss to get hit, allowing yourself to be wrong, right? So you improve the entries of your positions. But this isn't, again, rocket science. So now, just looking at the current environment, okay, knowing that we're currently trending down, knowing that last week I covered this from a daily perspective, right? We saw a decent amount of resistance here, a breakout here. Volume did expand into it. Notice right here. I love this weakening volume on a pullback, by the way. This is very normal, natural, healthy. Okay, breakout for new high, expansion of volume. This is healthy. Take the position. Okay. What's not healthy is that we can't be supported here at all because that leads me to believe this was a trap. So I am far more inclined to get out the second we start to break down here. Now, a lot of people don't do that because they wait for a pullback or they wait to see if their position maybe was on the right side of the trade because they've been burned before. The market does something like this and then comes back into the range. But trust me, the moment you start to have a loss here, and you hope is not a good strategy. That it comes back one day, it won't, and you're going to get trashed. So it's better to just cut your losses quickly. The position didn't go in your direction. Everything looked good here. It really did, right? But in this environment, what's going on? Well, a lot of uncertainty. And you can't predict the next Trump text, tweet, whatever. You can't predict whether or not, some other major macro thing is going to happen, right? If some really important economic leader dies, like we can't predict all of this stuff. That said, this is a pretty weak rally now. I'm pretty confident this was our local high, period, which means we couldn't even get back up for a retrace of at least 50 to 60% to 100,000 or even 105,000 for A move, B move, and now potentially C move. So this is confirming to me that the breakdown is probably going to go deeper than I once previously would have expected. I would have expected the next lower low to come somewhere into like 78 to like 75. Now I'm expecting closer to like 72 because the retrace was really poor. In this environment right here, though, right? Or better yet, in this moment, I would have placed a long trade. I did, and I got stopped out. Okay. So, like, look, pullback looks great. If you want, sometimes here's what I don't usually do, by the way. In a downtrend, I don't think it's wise. If you're buying like retraces, let's say you're playing that move, that retrace, things are looking good. You enter a position right here if you didn't enter back here, right? Because remember, I don't know how many weeks ago we could do the math, but remember this? Lots of moves to the upside, huge wicks. In other words, this is indicative of demand up to those levels. On this little candle and breakout here, right? This was a good entry, actually. Okay, hold the position. Look at the difference here. What happened though? Let me replay it to here. This is actually really good practice for you guys to see it on the chart. Right here. You see this move and rally right here? Again, we don't have like a ton of volume, so let's just not focus on volume for this sake, for this situation, okay? But here's what I saw, just using the price action, literally nothing else. Horizontal supports and resistances in price action, okay? We have our lowest low here. We have a new higher low and a higher low for like, I don't know, essentially a double bottom, okay? Right here. right? Lots of buying in demand down below 85,000. And especially from a daily time frame, 1, 2, 3, 4, 5 days straight. Bullish engulfing candle. Okay. Then what we saw is a lot of resistance consistently at about the $90,000 level, right? 90,400, $500, right? See all those wicks up there? See the tightening range? See how small the bars get in this range? Again, we talked about that. Contractions lead to expansions. Okay, this is again just textbook stuff. Now, breakout right here, very small, not a huge candle, but I tend to take those. Okay, contraction, I expect an expansion. I expect a break above this to continue. And if it doesn't, guess what? Such a small position with a tight stop doesn't hurt. To at least test the water to see, is it okay to jump all in, right? And in this case, you take the position, and guess what? Market expands. Then what happens, right? Nice. Look at this candle. This is volatility right here. Huge wick and sell off all the way back down, immediately bought back up. Okay. Next candle sold right back down. I hold this position, by the way. So notice right here, you're already kind of like at a break even. If, by the way, this candle went up to here, you would have been in a loss. Totally fine. I'm okay being in my loss as long as my stop loss isn't hit. Okay. So I usually, by the way, for those of you guys who know, in a situation like this, right, depending on the size of the candle, I either set it at the bottom of the wick of that breakout candle. Okay. So if the breakout candle was like from here all the way up to here, and the wick was right down here, my stop loss is right below that low, 89. Keep it simple. Okay. Why? Because that's already a confirmation that I'm wrong. If it goes down there, I'm wrong. No matter how, oh, but I have to be right. No, you don't. So just remember, like the market is telling you your timing's off. Even if you're right about the way that it's eventually going to go. Okay. No egos here. Just you were wrong. The market traded against you. In this case, notice how we were right almost immediately. 1 day, 2 days, okay? Pull back, fine. You're still just above. Look at right here on this close. This is the highest close, really. I mean, this one technically was, but I like this candle more because the candle close here tells me, okay, this thing's ready to go. Here, it could have just traded back up the next day and sold back off. Okay, another candle close right back below. So I kind of like to have a close above the wicks here to confirm, or just at the highs of the wicks. Like this is a pretty small candle, but look how strong it is. No new lows below the prior lows. Close the highest close of the entire range, right? And look, the close is super close to the wick. Okay, so this is like a very strong candle, even though it's a small candle. Follow through, sell back off, stop loss hasn't been hit. Okay, now in this situation, look, let's say you had your wick right here. Look at this is why you want to stop loss below, just below this little guy right here. It would have got hit, right? And that's fine. But this is why I sometimes on my breakout days, I set a stop loss within, for example, I never do like whole numbers. In this case right here, let's say this was like just 89,000 exactly. Okay, to give you an example. I won't set a stop loss at $89,000 because that's kind of like a mental number that a lot of traders might have, right? I might do a couple $100 below random number. So like in this case, I'd be like, okay, let's assume, right? 88.87. That's my stop loss. And it's really not that big of a range, right? If you do the math, this is an extra 0.5%. So a 0.5% loss on a 10, 15, 20% position of your entire trading portfolio, it really isn't going to hurt you that much. Okay. To take 5 of those in a row, right? You can take those. You can take those jabs. So this is why you don't ever do whole numbers too. I think that's really important to note. A lot of people might do that. I never do. And I found it helps me with my stop losses and not getting hit. But look at the volatility. But this is what happened, right? Bam, another guy. So a stop loss still isn't hit. Okay, another one. Okay. At this moment in time, by the way, sometimes you feel pressure. You feel inclined to want to sell because, like, look at this. Now you're in a loss, right? If your entry was here or here, you're in a loss currently. It's no fun to sit through that. But I'm not wrong. The market immediately rallied, and now it's just doing pullback. What? To what used to be a resistance becomes a support. Well, we know this now. Okay, you wouldn't have known it in the second. Now look how cute and pretty this little candle is right here. Notice the wick on it. Notice the size of it. Notice how we're tightening on the pullback. I'm willing to bet volume declined. The pullback volume declined. Expansion on the buys, pullback volume is dying, declining. So you always want to see, not always, I shouldn't say always. It's as a rule of thumb, I like to see volume decline a bit on the pullback. Okay. That's actually very helpful as well. Now look at this guy right here. Notice how it doesn't even require much volume for this guy to be far bigger in terms of size and magnitude. Do you see that? Look at the volume here. This is indicative that there are no more sellers. So it doesn't require that much buying in order for the price to pump and create a major bullish engulfing candle. Major relative to the prior one, I should say. Right? A big bullish engulfing candle. So to me, like this is like, okay, we're in. I didn't get stopped out, right? We saw a lot of volatility. Look at this is within like not even a couple bucks. So you shouldn't have got stopped out here if you entered on this day. Okay. With the tight stop. If the market went like all the way down here, already that's kind of it's indicating you something's wrong. The rally wasn't strong. Now we're seeing way too much selling. This is just a pullback. Okay. Play it out. Bam. Another major rally. And so you could have actually held that into what? I don't know, new highs. You would have, you could have added to your position at 93, right? Move your stop up, take a bit of profit, you name it, right? Usually when I re-enter a position, I do move my stop to the next entry, so you guys know. Okay, this is all stuff that like you'll do over time. I'm teaching you right now. But let's say you re-enter here. Now, I don't always add to a winning position if my confidence is waning. Let's say I see a lot of stuff going on in the markets. I'm seeing a lot of wacky trades, in terms of like deviations, right? What's normally happening in a market doesn't happen. You're seeing gold rally like it is right now, while the stocks are also up, but then the dollars, there's just a lot going on. For what if my gut's telling me something feels off, I don't add to winning positions more often than not, especially in a downtrend. Okay, in an uptrend, different story. Like in a strong uptrend in an environment where everyone's greedy, I'm more apt and prone to add to positions. But in situations where I'm buying retraces, I don't. I'm actually looking to short markets more often than not. But I'm just teaching you guys this because like a lot of you guys know how to buy and hold spot. Okay. And this is also just a good skill set to look at and learn how to look at volume versus candlesticks and bars. In this environment, I would not add to a winning position here. Okay, just as a heads up. And if I'm getting into a position, it's a lot earlier rather than later in, 2 to 3 moves in versus a first move in. Okay, off of a major low. Does that make sense? Which means, yes, it is harder to buy and hold spot crypto or any asset for that matter on a retrace in a downward trend. Okay. Um, that said, if you did add to this position, let's say you did it right here and this bar wasn't as massive as it looks and it was a little bit smaller, you're going to have all sorts of examples all over the place. Is why you should look at charts often and try to use volume to do that. Okay. And let's say the bar like was like the low was right here at $93,094 or whatever, 93.1. Okay, I'd set my stop right here as I enter right here. I've already got one position here, one position here. Maybe my average is 91. My take profit would be 92. You're like terrible risk to reward. Don't worry about risk to reward. Worry about like working some good rules and being consistent with them. Because eventually it'll matter in a bull market. Eventually it'll make you a lot of money. You only need 2 to 3 major home runs to make a lot of money in markets. That's something that I've started to learn, like a lot of people think about, and I used to in the past, and I forgot when I stopped thinking about it. Maybe once you get to a certain level, maybe it matters again. But sometimes it's good to just build your confidence in your skill sets and being able to like focus on good risk management. Like I'd rather the majority of you on this call go and lose 5 to 10 times in a row so you kind of get a feel for the market and still feel good about yourself. It's going to be hard, right? When you're wrong that often. But if you can be like, wow, I actually followed a rule, like my own guidebook, my own rules, and I didn't deviate from them, right? And I actually was applying what I learned. Like I think that's huge for your confidence, and one day it will make a difference and matter. But if you're not practicing, you're not losing, you're not actually trying. And so then all you're going to ever do is be, consistently on these calls, which I'm glad you are. But my goal is to have you do this yourself, like that you could graduate from, using the stuff that I teach you to go and do it, right? Versus constantly like, hey, what's Paul going to say about the market next? You know what I mean? Like you shouldn't have to need me, or anyone for that matter. But that aside, in this move right here now, I'm looking at okay, from this range up to the next range, where do we see a lot of resistance? Here, right? To like right here. So sometimes it helps to zoom out because when you zoom out, right, you can see well, we got quite a bit of like resistance, like right here, once, twice, three times, four times closes. Perfect. So daily, back, perfect. That seems to be a pretty good range of resistance. Breakout, right? Perfect. Expansion in volume, consistently expanding volume into new local highs. Now, here's what I would have liked to see something exactly like this into a pullback. Let's play it out. Let's actually go a little bit slower. Yeesh. This is totally fine. Notice how the volume, again, declining into the pullback here and here. Do you see that? Healthy, fine. Take the position. Next, yikes. Not looking too hot, but hey, you haven't been stopped out. Okay, not a huge deal. Let's play it out a little bit more. Here's where you're wrong immediately. Whether it was, whether your stop, let's say you were like really tight and you wanted your stop to be like right here. If your stop was like right here, perfect. You're already stopped out by this candle. It would have saved you the move all the way down to here. Okay. So already, even though I would have loved to see this, look at how now we're expanding to the sell side, and we actually broke down below what should have been a support here. And it one time it was a support. But in all reality, this is just telling me that there's a lot of weakness in the market that even rallies with good, um, you know, I would say good charts, good volume are not being sustained. So to me now, that's an indicator that the market's weaker than I expected. That's it. Um, that our rallies are likely not going to come back up to 101 unless for whatever reason we get some new major, macro event that really kind of changes the trajectory of the market. But in this environment, that's not looking too hot. So let's just play it a little more. Right. And you'll notice something happened interesting here, right? It's a lot easier to see when I'm training, I guess, sometimes because maybe your head's too in the market. But look at this resistance, support. What do we see here? So even though we had an uptrend by here, let's play it back. This is fine. But once you start to get into this territory here, that trend broke, essentially. It's not perfectly broken, but here's my point. We failed to hold a major support right here. So it's okay to get out early for being wrong, even though, yes, the trend is up. Because this is the way that I look at this is the odds of a continuation in the downtrend are greater. You're fighting the current here by buying it up. When the real goal should be maybe looking for some shorts, right? And so for those of you guys who are like not used to or try, like shorting is a little bit more difficult, I would say on average. But when the bottom falls out from stuff, it falls and it falls fast, right? Markets tend to take the staircase up and the elevator out, or as some have put it, right? They jump straight out the window. Um, so this guy right here, though, is almost immediate confirmation, growth and volume. And you know what? It didn't take that much. Look at this. Look at how weak this sell volume was relative size wise to the buying up here. Okay. For look at the difference in the candle here. Look how big this candle is. That's a big candle. In other words, there's virtually no buying now for this guy to occur. Okay. Hey, if you're enjoying this call so far and you're learning a lot, then you're going to want to join Altcoin Pro University by going to altcoinpro.com, where you can get access to any one of our live weekly calls with our coaches and experts. And every single Tuesday, I host our Technical Analysis Tuesday call, where I teach you everything you need to know to succeed as a crypto trader and investor. And you'll get access to these plays live, where you can also ask any questions you might have. And by the way, one of the best ways to take advantage of these plays is by having access to other people's money. When you go ahead and get started with breakoutprop.com, you can essentially pass a trading test, which yes, will cost you a bit of money to take the test, but you get an unlimited amount of time and 10 different tries to pass that test to get a funded account upwards of $100,000, where you can potentially keep up to 90% of your income. And so realistically, this fee that you would pay is minimizing your risk to literally just that. And personally, I think this is one of the best ways to take advantage of levered plays in the crypto market, because it limits your downside risk while increasing the profit you can make with other people's money. So go ahead and check out breakoutprop.com. The link will be in the description below, and let's get back into the video. And even buyers stepped in here with greater buy volume yet again. Okay, and now this is on Kraken. We could probably, let's do this real quick. Let's see. Let's go to like Binance. So we got Binance, USDT. Okay, still pretty big buy volume. See how it's slightly different over here? Just slightly. That's why sometimes it's helpful to look at bigger exchanges, different exchanges. Is there a common, is there a lot of shared commonality in the volumes, right? If the one volume is majorly different and then the rest, it's because they have some liquidity issues or some wacky thing happened over there. But in this environment, they look pretty similar. The sell volume was slightly bigger on this exchange versus on Kraken. Let's look at Coinbase. I believe this is Coinbase. Good. Okay. Look at how much bigger the buy volume was on Coinbase to get us to here. So when you aggregate all of that, right, and aggregators do, at some point in time, the chart might look the same, the volume might look slightly different, but we even had bigger buy volume on Coinbase. So Coinbase and Kraken, US exchanges, seem to have quite a bit of buy volume here trying to hold the price up. In other words, there was a decent amount of, whether it was limit orders or people that stepped in and said, when they saw the price up here, if the price comes back from 96 to 89, I'll buy. And they do. And when they did, look at what occurred. Right? They supported it for a day, which kind of created a very small rally, and a few more buyers stepped in all the way back up to 91 over the next couple of days, but they did not have enough, gas in their engine to get any higher. And if anything, all of this buy volume, which is far smaller than the sell volume, was not enough to get the price back above 92, and it was a very weak inside candle. So this to me, it's like immediately, like after a few days of this, 1, 2, 3, 4, pretty straight signal. You know what? Like sell, get out. If you didn't want to short the market, okay. Let's say you didn't, and let's say you're sitting in your position period, okay, any position for that matter, and you saw something like this: 1, 2, 3, 4, ugh, struggling. Now, if all I had was this, that's not a really great, confidence boost, because I'm like, well, what if it, breaks back down to 84, or excuse me, 88, then it gets support, then it breaks above 89 and then rallies. That's possible. But when you look back at what is a support and was a major resistance, this is a lot more helpful now. To me, now it's a more obvious sell, right? Then when you combine that with volume and what's going on over here, that also helps. It tells me more of a story. So if this breaks down, what's a likely outcome? Well, realistically, I would say we probably break below 88 and sell further, right? And you did for a second, right? And it's possible we break right back above 89, rally a little bit more here, then break further down. Listen, nobody knows. But me personally, like, I wouldn't be buying the crap out of this low, even though it is acting as a pretty strong support. Let's remove this now and look at this overall. Go to that 3-day time frame. It seems that, 88 is a pretty good support here. Excuse me, 85, 86 right here. See that? Pretty good support. But the more you knock on a door, the more likely it breaks down. Now, what's interesting is this was our major breakout range. You guys remember? Breakout above 88, right? So 86 to 88 rally, and it rallied hard, right? So this is kind of like our last line of defense for a Bitcoin. And again, if the bottom falls out on this guy, it's likely going to occur across the board. So just as a heads up, like for those of you guys who are worried about your portfolios, or maybe if you're not dollar cost averaging and you're kind of just been sitting on it and now you're down, my personal experience leads me to want to tell you that you should sell down to your sleeping point. And I'm not telling you to set like this isn't like financial advice. Do what you want with your portfolio. But if it's causing you stress, sell down to the sleeping point. At what point, if the market fell 50% tomorrow, right? Would you be okay, with your portfolio because you also have some cash on the sidelines? I think that's important to think about. And if not, right, knowing that the trend is down and if you're only a spot investor, where would you like to buy a dip for a retrace, right? Could it be 76? Could it be 72? I think those are my major ranges. Between like 77 on the high down to like 72 on the low. And on any major volatility, if I'll get an alert. I usually I have alerts on like a separate like my iPad that'll go off and it'll be like I'll have alerts literally set for 67, 65, and so if a wick comes into those ranges, I'm actually buying up. Like I'm going into my exchange and just watching the volatility buy, wait, lower, 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 buy. Everyone on this call has probably seen some of those days where it's like, holy crap, like extremely volatile, some crazy thing happened. October, you're watching it, right? Everyone. So in those situations, I usually buy knowing that we have a lot of support and that type of volatility, although it's an indicator of weakness or some major issue in the market, structurally, you name it, right? When you see a 27% dump, like more often than not, you're gonna see a bit of a retrace, and that volatility can make you a lot of money. And then, I'll wait to see what occurs once we start to hit these ranges and then start to get out. So there's a lot of money to be made in those types of trades, by the way. But I don't want you guys to think about volatility trading as much as just mastering these fundamentals. Notice I didn't even use any indicators, guys, like zero indicators. Right? And I would like to say I've been relatively spot on, right? Even with the retrace. What's sad is our retrace has been really weak. It's been a very weak retrace. And it's almost look at this. This is what's interesting. This is our retrace range, and look, can't get back above a support. Look at this support. Strong support from November on till the breakdown. Resistance, breakout, no support, resistance. In a downtrend, the trend is more likely to continue. So I'm of the opinion that we're likely going to come back down here. And at no point, like the only point in time I'd be more bullish is if we can get a new high. That's it. If we get a new high, then I'm a bit more bullish. High support 93. Okay, great. And this is just a boatload of volatility with the current environment we're in. Bull market back on. Great. But this is kind of like your last zone of like this is a bull market. Because it is possible that this is actually still a bull market. But I've seen this type of stuff before. It's extremely difficult for Bitcoin to make a comeback from something like this. But notice how this is our new higher low. We have higher highs, right? So three higher highs, three higher lows. But this is a very um weak retrace. I would have liked to see something like this. And instead we're getting this. And so we could bounce one more time, but it might be like a dead cat bounce and then just break down. To me, that is the more likely outcome now. And I don't know how to explain that. Just in my experience, I've seen these things roll over. And we really would need some major changes in the environment in order for this thing, whether it's some major catalyst, I don't know. Um, but with gold rallying, that's what really scares me. I don't think I think that's kind of one of the bigger ones. Let's see here. Ondo, yeah. I haven't touched Ondo in quite a while, so I haven't looked at it. Let's look at it. Where are you seeing that, Cliff? Looking at this chart, I personally just want to stay the heck away. So Cliff said it looks like Ondo is trying to break through resistance recently. I don't know if you're referring to maybe a shorter time frame. I would always zoom out, man, and just kind of look at it. Um, if you're talking about like a resistance at like 33 cents up to like 34, 35, yeah, potentially, right? It could rally up to 38. And I don't want you to feel like, you're not looking at it properly or anything. But this chart right here is pretty nasty, right? So even just looking at it, right? Not only has this thing rolled over and broke for major lows below 57 cents, um, lots of resistance once, twice, three times here. Just horizontal supports and resistances, right? Between like 63 to 60 cents. Break down hard, right? Now down to 33, 34. Um, Even then, if I were to just take a trend line, try to get as many points on there as possible. It's probably like right there-ish. Yeah. Right. With one bear trap. This is probably the most likely trend line that I'd be looking at on this guy. This isn't your textbook head and shoulders by any means, but I don't really care because if I were looking at this as a one-to-one move from the neckline up, it's $1.55 ish, right? About that. Oops. Um, which means on the breakdown downside, I'd be looking at, well, I don't know if they'd even have that much, but probably if look at already down 60%. And we're not even done. I don't even think we're done moving further to new lows in the crypto market, which means I think this thing could dump back down to its opening prices pretty easily, 20 cents, which would be like another 50% down from here. No, not 50, but a lot. Um, yeah, so if you're day trading it, fine. But on an asset like this, I'd be looking for short positions. I wouldn't be looking to long it. The only thing I'd even be touching on retraces are your major cryptos that have quite a bit of liquidity. Even and by the way, great company overall. Notice that even the best companies in crypto cannot fight the overall trend, especially if their tokenomics aren't working for them. And a lot of the times that's actually the case. They didn't make the token in order to make you money. They made the token so they could get money from you. And then build their companies or their own private wealth. Um, let's see here. Ichimoku, I will Mohammed, I'm not going to train on shorter time frames. I don't think that's very helpful for the majority of people on the call. And I would argue it's not that great for short time frames. So I would use it down to the 4 hour, probably max. Otherwise, I'm changing settings on the hourly, but by that point, I might as well just zoom out. Um, I wouldn't trade it with shorter time frames. Hype had a good pump. Probably a retrace, right? Um, I'm not buying pumps even on news right now, to be honest. Um, I really focus on protecting capital anymore. Let's see here. Yeah, these are the types of rallies that I actually like to look for short sales. A lot of hype on these, right? This is a great name for it too. But what do we see here, guys? Like we see a crazy amount of resistance now between 32 to 34. So these are the types of rallies that market makers love. And if I'm a market maker, I'm potentially involved in this move. I don't know who's behind it, nor do I really care to know. All I know is that this is the type of stuff that gets people to want to buy it. So as they're buying their bags, they sell it off, and then it comes back for a double bottom or new lows. So to me, like I'm looking for short sales on these types of products. Not because it's not a great product. I don't, again, just the chart itself. Um, so if you, by the way, for a hype, if you've been like, if you've been sitting in this play, and you're looking for a good place to de-risk, I would say now between now to $34, but I wouldn't wait for $34. I'd take a bit here, take a bit there, take a bit there. On the breakdown, take more, right? Like, and someone's gonna be like, "Oh, you're an idiot for that because they just had this crazy news." Guys, do we not remember when I told you this thing looks like it's gonna roll over and die? No, I didn't say die. Sorry, wrong word. It looks like it's gonna roll over and play dead for a bit. Remember, I was literally covering that on these calls. And this was around the same time that our team put out really good reports on it because it's a great company. I think this one's going to survive for sure. But at the same time, it's not enough to fight the ocean, the trend down. Um, and that should be more than enough for everyone to like someone says, well, on Bitcoin, it's not. Maybe not, but like when you have everything else in the crypto market dumping 65% off and the stock market's at all-time highs, we have to take this more seriously. And we actually have to be serious about like what is the state of the actual crypto market. This is a great crypto company. And the stock market is in a new all-time high territory, just your indexes, right? Major stocks are. Where are these at? Even off the rally, down 50% is nasty. I don't know too many serious, like we're talking long-term investors, pension fund managers that are going to look at any of this stuff and take it seriously. Just as a heads up, which means like there's money to be made, and the money's in the volatility. You can make money on it, but like now we have to be extremely selective about what you invest into. It can't just have a good narrative. It can't even just be a good company. Like the tokenomics need to make sense for the token to do well, and in most they don't. Which is why you see these nasty periods where you'll see a 65% dump and Bitcoin's down 30%, right? And this is down less than a lot of other cryptos. So do the math on that. But when I see rallies like this, let's look at the volume. Oh, I can't look at the volume on Hype here. Um, let's see. I don't know if an exchange has it listed. Hype is on there, but the problem is they don't have, most of these are just new listings. Yeah, I don't like looking. Notice how we don't have any data here, so it looks big, but that's relative to all the little ones here going back to like December. So I don't have enough data on the actual volume. I'd have to go to like the DeFi exchange, and I don't want to do that right now, to know. And even then, I don't know how much I trust data from a lot of DeFi sites. Not that decentralized finance isn't great, it's that they don't have to share volume data at all, or make it right. So to me, I think a move like this is a better place to de-risk or to short sell. And I get it, like this looks good, but I've seen this a lot on cryptos that are trending down hard. You'll see a major spike and it immediately sells right back off. This is kind of like your exit play, usually by major market makers or people who have a lot of the token. Okay, guys. It looks like we don't have any more questions. Thanks so much for hanging out with me. Appreciate your time. Hope y'all learned something new, and we will see you on the next Tuesday call. Have a great rest of your week. Goodbye.